Usually, a recession closes in slowly. Confidence ebbs away, investment dries up, jobs are lost. This is different. Economic activity has simply stopped, vanished. Unlike anything we've experienced before. In 2008, this was the epicentre of the UK crisis. Banks collapsed, finance seized up, and it was the knock-on effects of that that were gradually felt around the country. This time, the government has just called a halt to large chunks of economic activity. That affects, to some extent, every business, every street, every person around the UK, and the impact is almost immediate. In the financial crisis, the peak-to-trough fall in GDP took well over a year and was 6%. New forecasts from Oxford Economics put this drop at 10% in just a few months. After 2008, it took 3 years for unemployment to hit its peak. Now, unemployment is likely to jump. Oxford Economics sees a sharp rise from 3.8% to 6%. And that's despite a furlough scheme designed to keep millions of workers in their jobs and the longer-term uncertainty about what happens when it's wound down.
So what we're seeing so far is that lower earners and young people are about twice as likely to be losing their jobs as older people and higher income people. Now, lots of people are worried about what happens in the future, so it may be more broadly spread as the months go by, but right now it's lower earners hit hardest, and that's coming against a really significant backdrop of the last few years, seeing big benefit cuts to poorer families. The incomes of poor families actually fell in the last 2 years. That's not what we should have been seeing when the economy was actually growing, and that feeds through to a fragility. It feeds through to much lower savings rates, savings levels amongst those families.
The fact that this downturn is a choice, albeit a forced one, explains the size and the speed of the policy response, designed to protect and repair the economy as much as possible, avoiding a worse downturn, even if its chief architect won't offer any guarantees.
In spite of what are unprecedented measures in scale and scope, I can't stand here and say that I can save every single job, protect every single business, or indeed every single charity, the focus of today's announcements. That's just simply not possible. But what we can do is put in place what I think is an enormous amount of support in a targeted fashion as best as possible to help as many people as possible get through this.
Debates about who is deserving of government support, the conditions that should be attached and who should ultimately pay for it are largely set aside for now. But when we come back to them, the question is whether this crisis will have prompted a reset in our economic thinking.
The long-term questions about fairness and inequality are the ones that we really need to think about now. This has brought home to us the importance of what everybody's calling key workers, the workers we cannot do without. And on the whole, these are people who are not so well paid. Many of them have come from other countries, they're immigrants. So that's an opportunity to reflect on what's important in society.
As activity starts up and streets refill, some tough economic analysis will be needed. Who bore the burden of this crisis, and who should shoulder the tax rises to pay for it?
Helen Thomas there. Well, last week, the International Monetary Fund warned this would be a crisis like no other. Never have we witnessed the world economy coming to a standstill. So what can we do besides witness? We're joined now by the economist Vicky Pryce, who was the joint head of the UK Government Economic Service from 2007 to 2010, the Nobel Prize-winning economist Joseph Stiglitz, and Labour's Yvette Cooper from 2008-2009, the Chief Secretary to the Treasury. Yvette, if I can start with you, you will remember very well the last economic crisis. Do you agree with that assessment from the IMF? This is unlike anything that we will ever see.
Good evening, Emily. Yes, I think this is unprecedented. This is on a scale that we've not seen before because of the nature of this. because we need to save lives, entire sections of the economy are effectively being put on freeze, on hold, until we can get back to normal again, until we can get through this health crisis. So that is very different from previous crises. Although there are some issues where, the same issues get raised. For example, it takes a government, it takes something the scale of a government to be able to step in and support businesses, to support families, to support people through this. That was the same in the global financial crisis. It's the same again now. And, only governments can do that. There is a problem that we don't have governments working together across the world on this sufficiently. We should do more of that. But there's also, as your report made clear, those who are on the lowest income, those who are having the toughest time are going to also at risk of being hardest hit by this as well. And that's why governments also have to take active steps to make sure there is additional support for those who are being hardest hit, those who are on the lowest income, those who have the least resilience as well.
When we look back to, this is a big jump, but come with me on this one. Post-World War II, we saw a brand new social contract. We had Bevan, the NHS, the welfare state essentially emerged from that war. What is that thing this time, Yvette?
So I think it will be a series of things. You're right that first of all, it means we have to properly value the people who are keeping us going right now, who are often some of the lowest paid workers, whether that is the social care workers who are complete heroes in this crisis, but are often some of the least valued, whether it be the public transport workers, the cleaners, the people who are keeping the economy and the society going at the moment. I think there's also going to have to be a serious rethink about the fragility of our whole social insurance, the way in which we support each other. The truth is that any system would have been had huge problems faced with coronavirus crisis of this scale. But even so, we can see that the fact that so many people are losing their jobs, even though the government is trying desperately to support them and to keep them in work, those systems that keep people in jobs just aren't strong enough, and too many people are ending up on the universal credit, which we know is too weak a system, has too many delays in it, pushes too many people into poverty. So there has to be a rethinking of the way in which we support each other and prevent child poverty, prevent inequality as we come out of this as well.
Let me ask you, Joseph Stiglitz, the same question. A different system, but exactly the same problem. If you were looking at levers now, in terms of taxation, in terms of structural overhaul, how far would your imagination be going on this one?
Well, I think there is a need for fundamental reform. I think, in addition to the points that have just been made, all of which I strongly agree with, there is another one, which our economy is not very resilient. We're running, it's like running a car without a spare tire. We didn't have the capacity to increase the production of tests. We didn't have spare capacity to even produce, let alone distribute the masks that were needed. So in the United States, we've really seen the fragility of our basic economic system as well as our social protection system. And that, I think, is going to necessitate a revisiting, not only of the balance between the government and the market that we've just talked about, but also and the problems of inequality and the fact that some of the people who are on the front lines are really so underpaid. But we'll have to rethink the way our market economy works, because it hasn't served us well.
Vicky, Pryce, is the whole argument for austerity completely dead now? I mean, it's definitely unfashionable. Has it gone out the window? Have we forgotten about debt? Have we forgotten about the deficit?
What we've seen during the austerity period in the UK anyway, and in many other countries, is that quite a lot of the services that we now rely on were cut back quite significantly, or they didn't, in fact, increase at the rate they should have done to look after the population. So there is a rethink now as to whether austerity made any sense at the time. Was it too rapid, too strict, too stringent, and has led to the problems that we have right now? But we are going to have to deal with the debt. when we get out of this, because so many countries now are trying to borrow in order to spend more on the fiscal side. And we have the monetary authorities who are putting huge amounts of liquidity into the system, and their own balance sheets are going up very significantly. So at some stage we'll have to rethink. But we may not go back.
Every country in the world then get it. I mean, you wouldn't advocate anything other than spending at this point, I assume. And every country will simultaneously be facing these extraordinary levels of debt. How does that get paid off at the same time then?
I'm imagining that a number of countries will in fact default. They're going to need a lot of help from the International Monetary Fund, because they won't be able to do anything very much once they get out of it in relation to being able to reduce their debt positions, or even now able to borrow more because the markets won't lend to them. And we saw a period just recently when Italy was almost unable to borrow in the capital markets because the European Central Bank looked like they weren't going to support them. And then that made the ECB, the European Central Bank, change its policies very significantly. And now they're putting something like an extra 700 billion of euros into the system in the Eurozone to support countries and buy their own debt. In other words, buying back debt which has already been issued or will be issued, giving guarantees, in other words, for them being able to raise money in the market.
So let me bring us back to the present. Yvette, it was the poorest that were hardest hit in 2008. I think there was a disquiet. We now recognise that it was the banks that were bailed out that may have brought what we now see as a pretty much worldwide populist revolt. Will the poor be hardest hit again?
Well, I think there were choices that were made. I mean, during the crisis, the global financial crisis itself, there was a huge amount of support put in place for families, for businesses. We had a future jobs fund to help young people get back into jobs. But then coming out of that, the period afterwards, the decisions that were made as part of austerity, there were two problems with them. First of all, they didn't support growth and the economy and building productivity. So growth was much slower. And secondly, they were unfair. So George Osborne made decisions that were about taking billions of pounds, tens of billions of pounds out of the welfare system, hitting particularly working families hardest. Those were choices that were made. We could make those choices differently. The most important thing as we come out of this, which we will as we come out of this, is to make sure we get the economy growing again, that you get growth, you get productivity, you support the public services that we will have relied on to get through this in the first place, and then that all the decisions that we take are based on fairness and based on considering that those who are on the lowest incomes should not be taking the greatest burdens, quite the opposite.
Joseph Stiglitz, at the moment this is affecting rich countries. What happens when it actually starts affecting the rest of the world, developing countries as well?
Well, I'm very worried about that. The point is they don't have the resources, for instance, the United States has to respond, or even Western Europe. People there live much more densely. Their healthcare systems are not equipped to respond. And there are much more prevalent problems of health. And we know that this particular virus really hits hardest those who have other health problems. So it's going to affect them very badly. And the important point is that since we have such an interconnected world, if we don't contain the pandemic there, it will represent a threat to the rest of the world.
So, can I just ask you, who is leading the way on this? Because Yvette Cooper was talking about the need for global response. Which country is emerging as the leading force on this now?
Well, unfortunately, the United States is not playing the role that it should. It's not even having leadership within the United States. The IMF is actually doing a very good job. The head of the IMF has been very forceful in articulating the need for strong action and actually proposing effective remedies how you can use, for instance, something called the special drawing rights, SDRs, which are kind of monetary creation that Keynes put in when the IMF was created. And $500 billion could be created, and about 40% of that would go to the developing countries and emerging markets. So that's one of the strong areas of leadership, and several countries have supported that initiative.
Vicky Pryce, let me ask you now, in terms of what can be done right now. I mean, there's going to be very little political water, I imagine, between what Labour is suggesting, Yvette Cooper was talking about the right choices, and the kind of things that we are seeing the government doing already. And Rishi Sunak's plans have been pretty generous and widely recognised by both parties, by all parties. So is there anything that is missing now in terms of the levers, in terms of the things that should be in place?
One of the programmes, of course, that exists in the UK, or at least has been announced, is to allow companies to borrow a lot more easily and not pay an awful lot of money for it so that they can survive. The truth is that they're not doing it. The banks are not particularly willing to give them the money because of the way that the guarantees work. Firms themselves, which see their demand evaporate, and they have no idea whether the demand will ever come back, because a lot of what we're losing right now will never be recovered, like entertainment and eating out and all that sort of stuff. They don't want to saddle themselves with loads of extra debt. So some of the initiatives, although they look good, they look like it's a lot of money going into the economy, just isn't getting to where it should be getting. And we're going to see huge unemployment as a result emerging. And the idea then...
was asked if we could be at 10% like Norway. What would your prediction be?
Oh, yeah. It's very, very likely, and it will stay high for quite a period of time. That's the problem.
Thank you all very much indeed. Thanks for joining us this evening.